This episode is brought to you by Galileo FX, the world's top trading bot. Galileo uses advanced algorithms and customizable strategies to enhance efficiency, reduce errors, and operate 24/7, providing a significant advantage over traditional manual trading. Go to GalileoFX.com to learn how you can start automating your trades today. What's up, guys? Welcome back to another episode here of the BlockHash podcast. Today, I have another exciting guest, Matt, co-founder and CEO of Arch Labs, where they are building the permissionless financial rails for a Bitcoin-denominated world. We're going to talk about that today. We're going to talk about what they're doing in regards to Bitcoin and what they have on the agenda for Arch Labs. So, Matt, welcome to the show, man. It's a pleasure to have you on and happy to talk to you today. How you doing?
Good, man. Thanks for having us.
Likewise. To get started, I'm sure people would love to learn a little bit more about yourself and your personal story. Everyone's got an interesting one when it comes to Web3 and how they got into this industry. So tell me a little bit about your background and what kind of led you into this wonderful world of Web3 and then also eventually to co-founding Arch Labs.
Yeah, it's been a long ride. I think my history in crypto dates back. I think, geez, before they even called it Web3. Bitcoin in like 2013. I was mining Bitcoin in my college dorm room, just with laptop computers plugged into every outlet. And I had fraternity brothers that were buying stuff on the Silk Road. So I was like, oh, this is pretty interesting. And I had a buddy of mine who also was mining. He's the one that got me into it, and he swore that one day Bitcoin was going to be worth $100,000. And I was like, wow, that's pretty cool. It's less than $1. So regardless of whether I thought that was actually possible, I decided to become as big of an expert as I could on the topic. And that led me from cycle to cycle. 2017 really was where it kicked things off, when I could be a speculative investor and participating in ICOs and that whole bubble. And then of course, the market kind of went out a little bit when there was a lack of infrastructure. A couple of years went by, and then of course the NFT and DeFi summer cycle kicked on, and that was a lot of fun too. So I like to think that I've seen pretty much everything that's happened in crypto since its very inception. It's been a wild ride, but I've never really had the opportunity to apply my entrepreneurial skill set in crypto, which is where my passion really lies. I've built businesses not in Web3. I've had a few exits, but this was the first time when I saw an opportunity, namely the ordinals boom of 2023, where I saw this was my chance to actually apply my entrepreneurial skill set and experience into the world of Web3.
Yeah, that's an interesting story too. Mine's very similar. And I remember when Bitcoin wasn't, encompassed by this term Web3 and everyone just assumed it was like this magical internet money. And I had college friends as well that were dinking around on Silk Road and trying to figure out what this Bitcoin thing was. And it's amazing um, how far it's come since then. And now that you have like this ecosystem around Bitcoin, like Bitcoin Fi and ordinals and all these different things people are doing to try and program on top of Bitcoin. It's crazy how much it's evolved over time. Um, and it's really cool to see what you guys are doing today as well with Arch Labs. How would you best state your guys' core mission, like what you guys are trying to accomplish in terms of maybe some of the problems you're trying to solve or the challenges you're tackling with Bitcoin?
For sure. So, I mean, the core mission of Arch is really we exist to unlock Bitcoin's full potential, by building the foundational infrastructure needed for a Bitcoin-denominated financial system. As you said in the intro, the core mission is to enable decentralized applications and smart contracts built on Bitcoin without compromising Bitcoin's security model or requiring risky bridging solutions. And just really adhering to the core ethos and user expectations of Bitcoin holders. So Arch allows developers to build scalable, high-performance applications that are still anchored to Bitcoin's unmatched economic security and foundation, and most importantly, it's just distribution and liquidity, which is unprecedented compared to other crypto assets. So in short, Arch empowers Bitcoin to become not just the world's best store of value, but also the most secure platform for decentralized finance and programmable money.
What would you say is Bitcoin's biggest challenge today? Is that, in your guys' mindset in regards to programmability, not necessarily having that built on top of Bitcoin's network natively and something that's now, being discovered and implemented? What do some of those challenges look like?
Yeah, well, several years ago when Bitcoin was created, it made very intentional design choices, mostly prioritizing security and uptime versus performance, expressivity. So that really paved the way for Ethereum in 2014 when Vitalik came out with his white paper for Ethereum to really kind of plug that gap or that void to be able to do more decentralized finance on chain. But that was really because Bitcoin had chosen to leave this utility behind. And that's where chains like Ethereum and Solana really filled that void. And those challenges that Bitcoin really faces today regarding programmability is largely due to its limited scripting language. Obviously, Bitcoin has a native scripting language called Bitcoin script. It's not very easy or expressive to be able to build complex applications. You have a lack of smart contract infrastructures, to a certain degree, because Bitcoin doesn't have a native VM, right? Ethereum has the EVM, Solana has the SVM, so they have these various ways of doing, this more complex computations, and then enforcing the rules of that smart contract and, shuffling assets around from user to user. You have lots of different fragmented solutions. You have bridged ecosystems. You've got different meta protocols like Runes, BRC20, Alkanes, and different ones of the like. So all of this really creates a more fragmented and siloed, situation, which is not really what you want when you want to build a fluid and dynamic ecosystem. Another challenge is just UTXO model, right? Like the UTXO model makes it very challenging to build some of these more complex applications like AMMs and pool-based lending because it's just a little clunkier. You could kind of like compare the UTXO model and the account model as to like using cash versus a debit card. It's just much clunkier and much more friction when it comes to the point of sale or utilizing applications. So managing UTXOs, especially if you're trying to use a VM that's not equipped to handle UTXOs like the EVM or the SVM, that's the main challenge.
Gotcha. And bridgeless programmability, how is that something that can really help Bitcoin? What improvements might that also bring to the network in terms of things like liquidity, security, and maybe some other aspects?
When we looked at like the implementation and design of Arch, we really started with what does the end user really want, especially Bitcoiners, because Bitcoiners at the end of the day are holding it for one reason, sovereign money, not your keys, not your coins, right? So they're very suspect and unwilling to give up control over of their assets in a bridge. And as we know, bridges are probably one of the biggest single points of failure in crypto, and there's been lots of really large exploits over the years. So, Bitcoin holders are really just fine keeping it in cold storage or keeping it in a Bitcoin wallet like Ledger or Xverse. But they don't want to just, stick it in a bridge and then trust somebody else with their coins. So we really started from that and saying everybody else that's in this, Bitcoin design space that's doing a bridge to an EVM roll up and then do all of these, state transitions on the L2 level, and then you can kind of bridge back to the layer one. We felt that there was a enormous opportunity to be able to invoke programmability from the base layer, settle transactions on the base layer, and really drive demand for Bitcoin blocks. Because at the end of the day, we don't need to really focus on scaling solutions until we first saturate the base layer.
I read somewhere that there's like $10 billion in like wrapped Bitcoin that is locked into at least Ethereum, but I'm sure in other places as well. And that number is probably growing all the time. And that's a really crazy number to think about Bitcoin that's not, locked into its own ecosystem and on its own network that's elsewhere that can't really be tapped into for many different reasons. And there's a proliferation of L2s and rollups and meta protocols and different things out there today. So much so that I think it's actually hurting other networks quite a bit right now. And they don't seem as sufficient enough for execution on Bitcoin. And I'm curious, maybe what are the limitations that might necessitate Arch that are seen in some of these layer twos and the issues that they're causing?
Well, we already mentioned bridging, right? Like that's the first really major point of friction for users. If you have to bridge first before you can actually sign a smart contract, there's a lot of fear. There's a lot of, just questioning: do I actually want to do this and get my assets stuck on the layer two over some yields that I can get down there? So that's definitely one of them. Speed is another. There's a lot of base layer meta protocols that, they have to move at the speed of Bitcoin, right? They have no other choice. But we've built a custom VM that allows us to move much faster than Bitcoin because we built in a rollback mechanism and we have reorg resistance at the infrastructure level. So from an application developer standpoint, they can move at the speed of Arch while still on the base layer of Bitcoin because we give them this soft confirmation, and then they can actually move faster as if the transaction is going to be included in the block so that they can actually give a more Solana-like experience to the end user. So under the hood, we've got a lot of really advanced concepts and technologies working, but on the front end, you have a Solana experience on Bitcoin.
Awesome. And then on the front end side of this, what are some of the use cases that you're seeing come out that are being built in terms of applications on top of Arch Network? Are these in the realm of DeFi-based applications, wallets, RWAs, stable coins? I'm sure it's pretty broad-reaching what can be done in terms of that.
For sure. All of the above. And simply put, anything that's possible on Ethereum or Solana is going to be possible on Arch. But naturally, as we start to bootstrap our ecosystem and watch it start to, take shape, we've really taken a special focus on the core primitives of any DeFi ecosystem. So you've got stablecoin, borrow lend, AMM, order books, perps, prediction markets, all of these different core concepts that really make people want to come, number one, but also are the reason why yield exists. If you look at the reason why the yield is not very high for Bitcoin on Ethereum, it's because it's a financial system denominated in Ethereum. There's no demand for Bitcoin. If you want to capitalize on arbitrage, you want to capitalize on some liquidity or liquidation event, I should say, using flash loans or something of the sort, you need Ethereum to capitalize on those trades. You don't need Bitcoin. So really all of DeFi with regards to Bitcoin on Ethereum is really as a reserve asset to borrow against, but that doesn't generate yield for the Bitcoin itself, unless you have, lenders for it. So the primitives are really what's going to drive the yield to these, these liquidity providers. And that's what's really going to get a lot of people depositing on chain in the early days. But that being said, we're really excited about some novel use cases that are more aligned to Bitcoin as opposed to just anything that can work on any programmable blockchain. And the reason for that is that Bitcoin is the most widely adopted and accepted crypto asset in the world among countries, institutions, and the like. So we'd like to figure out ways to get Bitcoin to start creeping into everyday life and TradFi. So whether that's Bitcoin-backed mortgages, so you can buy a house with your Bitcoin, or Bitcoin-denominated life insurance policies, cash flow management solutions for businesses, because you already see companies like GameStop and stuff starting to buy Bitcoin and hold it on their treasury and books. So now we want to find a way to make that more capital efficient for them. So all of these, new types of concepts that otherwise probably wouldn't have been doable for other assets like Ethereum and Solana, now we all of a sudden have, this opportunity to build on top of sound money.
Which of these use cases are you seeing people gravitate the most towards? Is it like around staking primarily in DeFi applications right now, or is it some other area? I'm just kind of curious where people are kind of flowing towards.
Yeah, I think launch pads are certainly hot right now. Pump Fund was probably the clear winner of last year, making a ton of cash. So launch pads for meme coins are certainly hot. AMMs and DEXs are definitely hot as well, just because I think what our technology allows is something that no other tech stack can do on Bitcoin, which is an AMM at the base layer that moves at the speed of a layer two. And that's a totally trustless experience, by the way. So in the case of Saturn, which is one of our flagship apps, which is an AMM, the takers of the liquidity in that AMM take on zero trust assumptions at all. It's just you're trusting Bitcoin. So you're signing a PSBT that's generated by the AMM, and it basically just says, I'm willing to swap this amount of Bitcoin for this amount of runes. And then you're just trusting Bitcoin to enforce that. So you don't trust Arch Network, you don't trust our validators, you don't trust anybody except for Bitcoin, which is incredibly unique. And second to that, that soft confirmation piece that I explained earlier, they can move very, very fast where, you don't have to wait for Bitcoin to actually confirm the transaction before you can actually, do it again or swap or LP or anything like that. So I think that that's going to be a really powerful use case and really showcases like what you can use the tech for. And then from there, the developers will decide what they want to do.
Do you think in terms of the future, that we'd be able to build an ecosystem on Bitcoin that's as large and as expansive as one that's been built on other chains like Ethereum, Solana, Cardano, now Sui? Like there's so many out there, obviously. and they all have their own ecosystems and niches, and some of them, focus more on different things. But do you think Bitcoin can build an ecosystem that's as large as that at some point? And do you think that that's something that's, something that's relatively sustainable and something that can continue to expand?
Not only do I think it's sustainable, I think it's inevitable, right? Like I think these other programmable chains are going to start getting squeezed because Bitcoin is the most perfect form of sound money when you're talking about participating in certain programmable chains and ecosystems, and you need to hold certain assets to participate. I think holding Bitcoin versus Ethereum is definitely a much more attractive scenario. So you'll continue to see the Bitcoin DeFi ecosystem continuing to scale. I think it's a $400 billion opportunity. We're sitting on top of close to $2 trillion worth of value or wealth. So building a DeFi ecosystem that revolves around that asset, I think, is probably the best opportunity of the next 2 cycles.
What do you think about the state of the market right now in terms of the current cycle we're in? It's definitely been, I think, an abnormal one for most people, not just in terms of, price points and what's being seen on charts, but also in terms of the level of adoption and where that's kind of stemming from. In most cycles, it's generally been driven by retail, but now there's so many different institutional players and asset managers and hedge funds and nation states that are getting involved and putting Bitcoin on their balance sheet and finding ways to work with it. It's quite a different cycle than we've seen in the past. Do you have any thoughts on how this cycle differs maybe from some past ones, and maybe that how that's also kind of influencing adoption right now?
Yeah, it's always interesting to see like how first principles and momentum based investing kind of clash a bit in terms of style and thesis. And certainly we saw a lot of momentum last year, right? Especially in the Bitcoin space. You saw hundreds of millions of dollars from the venture community pouring into various L2s and protocols that were trying to capture this giant opportunity. But now that the market's kind of pulled back a little bit, and we're in a state of a flux, everyone's kind of going back to a little bit of first principles again. And I think that's where ultimately, the opportunity for builders and thesis-driven, high conviction investors really lie. Going back to the Ethereum example, it took years to get from 2017 to 2020 when all that momentum really started to pan out. So, like, you need runway, you need important like things that can bootstrap and accelerate the growth of the ecosystem. You have to remember that Ethereum has a foundation, Optimism has a foundation, Solana has a foundation. These all have these pre-wired support systems so that it can help the ecosystem grow over time. So in the case of Solana, like Serum was largely incubated by FTX and a lot of the early supporters of the Solana ecosystem. A lot of the main DeFi protocols in the Ethereum ecosystem, and particularly the infrastructure like Alchemy and Infura, they were subsidized by the Ethereum Foundation. So Bitcoin doesn't have this, right? So all we can do is build it ourselves. We can hope that there's some investors that see the vision and support it, because it takes a war chest to build an ecosystem. And without Bitcoin having one, it kind of puts us behind the eight ball a little bit. But that being said, it just the opportunity is clear for builders, so they're willing to take on that risk.
Yeah, that's a good point. Yeah, Ethereum and Solana and a lot of these other chains, they do have these pools of money, of liquidity, war chests, foundations, however you want to put it, that really aid in that development and helping them have those builder mindsets, even during, downturns and down markets, and being able to continue building out those ecosystems. And Bitcoin doesn't have that for obvious reasons, because it's, this glorious decentralized network. But it's cool to see that it's getting that level of support still through like the grassroots side of Bitcoin's community and the movement around it. And to see, I think you mentioned VCs as well, showing a lot of venture interest too in this is now in this as well now, especially now that there's so many other large players also getting involved. And I know you guys also recently closed a Series A as well. I think 13 million with Pantera, right? How does that also help you guys in terms of supporting your guys' broader roadmap and the things you're trying to achieve?
Yeah, I mean, building an ecosystem is incredibly hard. And as I just said, it takes a war chest. It's not just about building tech that works, it's about building a community that can echo your narrative. It's about improving the developer experience so that not only the first wave of builders can come in and learn a new skill, but the next wave. It's about supporting those applications once they kind of get their footing and what they need to be successful. So there's a lot of different aspects to community building and bootstrapping an ecosystem that's generally just flat out hard. So funding helps that. It's really easy to say like, oh, this is a VC coin, or too much VC money, and there's not going to be enough community. But the other flip side to that is, if you don't have a sustainable, long lasting contribution to the space, then it doesn't really matter what you're airdropping to the community. So the first order of business is building a sustainable ecosystem full of really really cracked devs, that we can build like this comprehensive and dynamic ecosystem that Bitcoin can exist in, and it exists for Bitcoin. That's the main point. But there's been a lot of projects that have raised rounds. I think that the main point for ours is that we didn't just copy paste tech together. We didn't just fork an optimism stack and do like a BitVM bridge or a multisig or something like that. Most of the concepts that you see built on Arch are all custom built modules and components that have largely been inspired by other ecosystems like Solana, but at the same time these things are specifically and custom built for Bitcoin. So it did take a bit of runway, and now we're getting to that point where we can accelerate.
How much of this goes into helping developers kind of get acclimated to building and programming and deploying on Bitcoin as well? I imagine there's a lot of educational resources to go into that, as well as finding ways to get them to integrate, because Ethereum has its own programming language, and all these different ecosystems have all these other multifaceted approaches that developers have to pick up. And I imagine for anyone trying to program in Web3, it can be a bit of a headache sometimes to bounce around and try and understand all these different things. Is it kind of straightforward for Bitcoin? Is there a learning curve there? Or I'm just kind of curious what kind of goes into helping a developer get acclimated to Bitcoin's ecosystem.
Well, if we're talking about strictly, Bitcoin building using Bitcoin script and, its limited stuff, then I would say it's incredibly difficult, which is really the reason why we built what we built. Me and my co-founder recognized the challenge for developers not having the critical pieces of infrastructure in order to support programmability. So we went ahead and built those things. That being said, Ethereum with the EVM and Solidity, I think that's the biggest network effect that they still have left. It is a challenge when it comes to trying to convert some of these more EVM or front end builders who are they find it a little bit easier since that's what they know. There's like 300,000 Solidity developers or so. There are much, much, much fewer Solana developers. But just like in the early Solana days, where they dealt with this chewing glass phase, where they didn't know how to build in Rust, they didn't know how to use parallelism. But they all recognized the opportunity for enhancing the user experience. That was challenging the Ethereum blockchain at that time back in 2020. So we're going to have much of the same dynamic, where you're going to have developers recognize the advantages of the technology, both in terms of user experience, lack of friction, and then just general performance. So they're going to want to come and learn that new skill. It just takes a little bit of time on the front end. Because we need to get our developer documentation, other types of open source resources available to them. Like on Solana, you have Anchor, which is an abstraction framework, making it easier for developers to build smart contracts. So they had to build that. It took, like over a year. So as these things start to come to be, then the developer experience gets a little bit easier, and then adoption quickly accelerates. But what you have right now is an enormous amount of interest and desire to go and build and deploy. Some devs are doing it successfully, others are having a hard time, but that is kind of the cross we chose to bear. The cross that we don't have to really deal with, that other L2s will be the friction on the user side when you ask them to bridge over to their layer 2s and then engage in DeFi. We're just one click away. So our friction is more on the front end, on the developer onboarding side.
Awesome. It's exciting what you guys are working on, man. What else is on the horizon here for Arch Labs the rest of this year? Do you guys have any upcoming launches, announcements, anything that people should be aware of? Anything in terms for developers that they should know as well? What's kind of coming up?
Yeah, so we're finally built with the V1 of the core product. So we're in our audit phase right now. Once that's finished, and assuming that there's nothing to address following the audit, then we'll be able to start moving towards mainnet, and that's a really exciting time because there's a lot of builders who have been launched on our testnet since last October, working on their applications. Some of them are ready, and they're chomping at the bit to try to go get to market and show their application to the world. So it's an exciting time for us. We have a lot of IRL activities with our builders, both in Dubai and Las Vegas, for the next couple of conferences, so that we can kind of lock in together, not just to get ready for going to market, but also just vibe together, get to know one another, and just strap in for the next couple of years, because this is going to be a journey for all of us. And something that's very unique about our ecosystem is that we give our builders very, very concentrated support because they're all in on us. They chose to take on that risk, and we understand that and don't take it for granted. So we go all in on them. We show them the type of support that they would want to see from somebody that they chose to trust, and so that we walk them into investor offices. We sell them to VCs, so that when they're pitching, they're just kind of like soft closing at that point. We have design resources like agencies to help them with their UX and product design. So anything that they need that maybe they can't afford, tokenomics help, advisory, that kind of stuff. So they all really like this stuff, and I think that that's really just going to put a signal out to the rest of the builders that this is where the opportunity really is to be successful.
Yeah, you just mentioned Vegas, right? When will you guys be there? I'll be there the second half of this year mostly.
Yeah, so there's the main Bitcoin conference in the US is out in Vegas this year. Last year was in Nashville. This year it's in Las Vegas at the end of May. So we will have a 1-day summit actually on that Wednesday of that week. I can't the date is escaping me at the moment, but the Wednesday of that week we have a 1-day summit at a really cool venue. We're gonna have panels, keynote speeches, some podcast stuff, catering. But the whole theme is really just all inclusive, all in on Bitcoin, and we're going to get a bunch of builders, we're going to get a bunch of traders, we're going to get some people from venture, everyone get their perspective. It's not going to be all about ordinals, it's not going to be all about staking. It's going to be a little bit more open format than that, which I think is going to be exciting, not just for Arch but for the rest of the builders in the space to get a platform to talk about their products.
Yeah, I imagine that will be exciting. I know a lot of people that are heading there as well for Bitcoin in Vegas for that event. So I'm sure it'll be pretty lively. There'll be a lot to do probably.
Yeah, it should be a lot of fun. I don't know if it was the best idea to do it in Vegas, because we want to try to keep all the liquidity in crypto, not in the casinos, because degens are going to degen. So we'll see what happens, but excited nonetheless.
Absolutely. Do you have a tentative date for mainnet at this point, or is it still kind of up in the air?
I mean, we have tentative dates, of course. Don't ask my engineers or ask what they think of me making dates, because they probably roll their eyes every time I announce a date or something like that, or a soft date. But I would say audits will finish early part of June. Assuming everything looks good, probably end of June is likely, but no later than July. You could probably quote me on that.
And then is Vegas and Dubai the main places you guys will be this year, or will you be at any other events or engagements?
No, we'll definitely be all over the place. It's just we're tackling it one quarter at a time. So naturally, you mentioned the round closing the other day, so we had a bit of PR to do and focus for not just that, but also how this plays into Dubai, Vegas, and the next couple of events. But we'll be in Asia, we'll be in Canada for one, I believe, and yeah, there's we always have some people from the team at all these conferences, so we'll be all over the place.
Okay, exciting. And where can people go to keep up with all of this? Is the website the best place to go? And then for developers, do you have any documentation as of yet, or any where they can go to consume some stuff?
Yeah, so the website arch.network has all that. So if you want to take a dive into our white paper, you want to take a look at the Arch book, which is the developer Bible for how to build on Arch. If you want to spin up or apply to be a validator, you can also do that through the website. There's some other high level documentation. If you're not a developer and you don't want too tech, there's some higher level stuff so that you can follow along on a high level. So that's the best place to start. Also follow our Twitter accounts. We have Arch Network, NTWRK is one, and then at Arch, just the 4 letters. Follow those on Twitter. and set notifications because we've got some interesting announcements coming soon.
Awesome. Do you guys have a community as well? Telegram, Discord, anything like that?
Yeah, we do have a Discord. The links on the Twitter.
Okay, awesome. We'll put all that stuff in the description for the episode as well, so everyone can easily find that. Matt, appreciate you taking the time today, man. It's been a good conversation. Love what you guys are doing with Arch and helping build out this ecosystem on Bitcoin. It seems to be quite the trend right now, and very excited for it personally to see this sort of grassroots movement like moving back towards Bitcoin and the level of programmability and things are being done. So keep up the good work. And keep me updated, and maybe we can do another episode sometime later this year and get a part two, maybe after mainnet and some more stuff comes out.
Yeah, would love to. Thanks for having me.